afternoon, Wealth Press subscribers and viewers. Welcome to another midweek update. I'm here with Lance Ippolito. Lance, welcome.
Hey, James.
Tell us, Lance, what are you trading today? What are you liking? What are you hating? Where's the fear? Where's the love?
What am I hating? So I think we spoke about this recently, the Nikola Motors, which we just had Tesla report earnings, and the market makers were implying about a $200 move on Tesla, and right now it's pretty much up or down $20. So about a tenth of the expected move it actually moved. But Nikola Motors, the CEO, has been very vocal about his stock position and trying to get the stock up. And he just announced yesterday, he loves going on Twitter, that he's not selling a single share of stock. And this stock has gone from about $90 to about $35 now. Again, with no single vehicle.
From $90 to $35.
In a short amount of time. We're looking at under 2 months.
So
and
is he being punished for trying to be too Elon Musk-like?
Right, because his whole thing was management will not sell any stock, blah, blah, blah. That's how much confidence I have in the company. Well, I mean, he's basically, when they went from VTIQ, the acquisition company, to Nikola Motors and had the IPO, we're basically looking at those levels pre-IPO. Then it had this big euphoria run up. So that one was absolutely crushing. Again, the options are very, very juiced. So you have to look at in the money puts or obviously short stock, but that one's tanking. And a lot of these Robin Hooders or the Wall Street bets traders are long holders of it. So you're starting to have some of these bubbles get popped, I feel like, in some names that were very popular. Like, for example, a lot of the airliners and cruise liners, they've never gone up after these big short-term rallies we see. And we really continue to see that rotation out of travel names, really out of value names. And we continue to look at inflows in technology, that NASDAQ 100.
Yeah. Okay, so it's back to a technology market. Earlier this week, real estate funds and ETFs were getting a boost due to some of the housing data. That the bloom has come off that rose a little bit later in the week, or is that something that you were following?
No, the housing names look fantastic. We had the biggest bounce back in housing data. Granted, it was, the estimates were very low. But if you look at home builders, Toll, Lanier, PHM just had earnings today. Stocks up 10%. Phenomenal names. If you like lower price names, Beazer Home, a little bit cheaper there, so you don't have to up pay. And then if you look at names like Home Depot, Lowe's, which had insider buying back in March, I believe, these names have really benefited from it. So housing is strong with interest rates. I believe the 30-year mortgage rates 2.75%, just hit a new all-time low last I heard. So when you have people that can borrow basically free money out there, and again, to qualify, if you have that 2 years of W-2s, you're seeing people get leveraged out and buying a home. I know just from my area and speaking with realtors, because I'm in the housing market trying to get something, there's very, very little inventory. There's very little homes for sale, so it's causing prices to go up, and you're up paying for houses. Even if it's a fixer-upper, you have to realize, they're going to go to Home Depot, they're going to go to Lowe's, they're going to buy paint. Even head of Treasury, Stephen Munchkin, said construction has bounced back compared to other sectors like retail.
Did you say Stephen Munchkin?
I call him the Munchkin. Like the Munchkin donuts.
Yeah.
Oh, he's not watching.
I like that. He's got a funny name and a funny look. But okay, so then precious metals are also doing well. Tech's going well. Jeff Zaninieri, who we talked to on Monday roundtables, was pointing out the fact that uh, in the current environment, it's important to realize that it's not a zero-sum game across sectors. It is possible for more than one sector to be delivering joy and value to investors at the same time. And I think we have a great case of that right now, with technology doing well, housing doing well,
Metals.
commodities doing well, X of oil, and that's pretty rare to have all of those sectors doing well.
Yeah, for sure. You know, a lot of the miners out there, especially the move in silver. I mean, it's very rare you're going to see a big move in precious metals with equity markets going up. Now we can make the case, you know, Russell or small caps or large caps are kind of flat, but I mean, imagine what happens if the market sells off with these precious metals, right? Imagine that flight to safety. Imagine that inflow that you're going to see in the metals. You know, it could be a truly massive move. You know, people are already saying gold 2000 and above. What will hit, you know, 2000 first, Tesla or gold? Uh,
Right.
maybe it's looking like gold right now. But yeah, you're having various sectors very, very strong, which is uh, unique to see in this current time period. For sure, it's and housing. Don't forget the biotech market has been hot, hot, hot too. A lot of these small cap biotechs have just been on fire. So you're having sectors where there's money going into for sure.
Yeah. Yeah. Well, so in terms of trading in the option front, what's the hot spot of the day and the
Woo!
week?
Names are moving and names are moving quick. Cybersecurity is really hot. Names like FireEye, ticker symbol FEYE, NLOK, another hot one. Um, Starting to see some August call buying, and also starting to see names like Micron, Western Digital, and Seagate, or as we call it, Sticks, ticker symbol STX. They're starting to see very aggressive call buying. Seagate has earnings shortly with WDC, and then Micron, you know, a very widely held name. We're starting to see big moves, you know, 2 to 5% moves a day. Um, and you look at other semiconductors, you know, kind of like your leaders, like an AMD and NVIDIA, they've been very, very strong, hitting new 52-week highs right there too. So there's definitely names and sectors where money is going into um, that if you're doing your research and you're not just saying, well, I'm going to buy a cruise liner or Boeing or an airliner or, you know, the stocks that get a lot of attention, look elsewhere. There's names that are moving.
Right. Great. Okay. Well, is there anything we should be staying away from?
Um, oof, gosh, I don't like retail still. Um, I think the retail names that folks are, how do I put this, that are thinking they'll bounce back. You know, like let's say a Nordstrom, right? Where people, oh, it's going to go back to 40 when everything reopens again from 15. I just don't think you're going to see these names see that kind of traffic that you did pre-coronavirus.
Right.
Um, you know, I was talking to a buddy who's a big retail analyst about Urban Outfitters with the teenagers, and he's like, "Well, look, there's 20-minute lines outside, but that's a, you know a short term inflow, or especially your names like Burlington, Ross, even your outlet stores that don't have an online presence. Yeah, when they reopen and when stores open, they're going to have lines and they're going to be popular, but that quick solution doesn't make up for 3 months of being closed and shut down. So I think you're really going to see, you know, even like a name like Kohl's and Macy's. I think you're going to see long-term damage to where when you see them up, yes, they're going to short squeeze and go higher, right? They can go up 5, 10, 15% a day. But if you really look at the longer term outlook, I think they truly truly look bad And if you're a put buyer or a short seller, you take those pops, and that's when you initiate your bearish positions for sure.
Right. Okay. Well, great. So lots of action, lots of money to be made. We'll leave it there for now, Lance. We'll come back to you, of course, next week, and have a great weekend.
Thank you, James. You too.